What's good, everybody? Today we're back with a trading recap for today's session, August 25th, 2026. And I'm just going to tell you guys how and why I entered my trade, my entry point, and my executions, and what I think I could have done better. And yeah, just give you guys just the overall breakdown. All right, so let's get straight up into it. Um, First, I do want to tell you guys like just the overall like frame of what I'm basing my strat off of. Alright, so boom. This pretty much sums it up in a nutshell. Now, I do want to say like this is discretionary, but these are the tools that I use that works for me, right? So you can't just like randomly whop these together and it just works. You feel what I'm saying? So first thing I want to see before I see anything, first thing I want to see is a high time frame liquidity sweep either on the 4 or the 1 hour. Okay. After that, I need to see a break of structure. After that, I need to see a retracement back into a continuation confluence, which would be either a fair value gap, an order block, equilibrium, or an SMT divergence. I don't necessarily use SMTs for every single trade, but it does help. Okay. And honestly, everything after a liquidity sweep and the break of structure is a continuation. Because the main two things I need to see is liquidity sweep, break of structure. That's bread, butter, right? I know some people who trade purely based off of that strategy alone, right? So after I see these first three steps, next thing I want to see is a break of structure on the lower time frame, right? So I want to scale down. And then once I see that break of structure, I need to see more continuation confluences like the ones I just mentioned. Fair value gap, equilibrium, order blocks, SMT is optional, but you can use that as well. And then once I see that, I want to see either buying or selling pressure depending on which way I want to take the trade. And then I enter, right? And then I take profits at the opposite draw on liquidity. So that would be another 1 hour high or another 4 hour high. All right. So that's the basis of that. Now let's get into the trade I took today. Let's get this off the screen. As you can see, this gets pretty messy. So I'm going to get that off there. Actually, I'll just delete it all. We're going to redo this. All right. So first thing I'm looking at is the fact that we're trading within this 4 hour gap right here. Right. So right here, I'm like, okay. I'm not anticipating that this is going to be bullish off the back, but this is like, all right, I smell some bullishness coming. Okay. So with that, right, we get that sweep of these lows right here. Now, credited that this is probably an hourly low. Actually, I'm just going to make sure it is just for the sake of concept. Okay, boom. So we swept these lows right here on the hourly time frame. Boom. So now what I want to see next is that bread and butter. I need to see a break of structure. Now you can see we overly broke structure on the hourly going into this is previous day, previous night, right? But what really did it for me was the fact that we got the highest time frame. As far as day trading, I think the 4 hours the best high time frame confluence that you can use to know where price is going to go for the day. So once we got that 4 hour break of structure, I'm like, okay, bet. Like my bias is completely bullish, along with the fact that we inversed this bearish fair value gap right here. Right, so now I'm like, all right, bet. All I need to see is a retracement back into this order block here, which is the move down prior to the move up that caused the liquidity sweep here, right? Then I want to see any fair value gaps that may or may not potentially get filled. All right, so I see one right here. Boom. And at this point now, I feel comfortable enough to scale down. All right, so now we can go back to the hourly. As you can see, this is going to get pretty messy. All right. Oh, let me mark out that 4 hour high. I'm going too fast. So boom, we have this 4 hour high right here. Boom, up candle, down candle. Highest point of that is your high. Boom. Right, so now I know, like, alright, if price comes down to this high, I'm not saying it's going to go up right then and there, but there's a pretty high likely chance that it will, because we know that, okay, at highs and lows, there's three sets of orders. There's limit orders, there's stop losses, and there's market orders, which don't exist at the time because they're market orders. You fulfill them at the best possible price. And yeah, we know that this is a price that sellers and buyers both agree that, okay, I know price is going to react off of this point, right? So keeping that in mind, I'm like, all right, bet, right? I'm going to scale down now to the 5 minute and see what's going on here. And by this time, it's market open. So what do we see? I'm in Los Angeles, so market opens at 6:30 for me. So immediately we break 5 minute structure to the upside, right? So now I'm like, all right, bet. I want to see another retracement again, right? So we have our order block here, the move down prior to the move up that caused the liquidity sweep. All right, do we see any fair value gaps? Nope, not gonna mark that out. Do we see equilibrium? Lows to the highs here. Cool, right? So now scale down. Do I see any fair value gaps now that I'm on the 1 minute? I see this here. Boom. Cool, that's chill. So now, once we make this initial move up and we confirm that we made a break to the upside on the 5 minute, now pretty likely it does leave gaps on the lower time frame. I do trade on the 1 minute, okay? So that's why I scaled down to the 1 minute. So once we enter this area, right, we come back up, we get buying pressure out. This essentially was my entry point, but actually I had a premium. I had a really good entry. I entered on the move back down from the gap. So this right here was my entry point. And mind you, we already got the buying pressure out of both of our confluences, right? So now pretty much my stop loss would be at this 5 minute low. And my take profit would be at the opposite draw on liquidity, which would be these hourly highs here. Boom. Now, usually when I see equal highs like this, like here and here, I'm going to go for the low-hanging fruit, which is what I did, right? So I took this, I made $387 for the day. Nothing major. It was actually pretty quick. This was like, when did I enter? 6:42. I was done at 6:49. I made $387 in 7 minutes. And I'm just going to show you guys right here what this looks like on the hourly time frame so you can see like, oh, that makes sense. As you can see, it looks like a mess. So boom, we have two stacked highs right here. We have this high, boom, then we have this high right here, this lower high. Me personally, I'm taking that low-hanging fruit, which is what I did. And you can see, after we swept these highs, what happens? We got a reaction, right? Now, you would have thought since we were bullish going into the day, we'd keep going up. No. Like I said, it's not guaranteed, okay, once we hit this point, it's going to go here or it's going to go there. Nah, you have to wait for confirmation and, you know, we'll see what happens. But that's pretty much it. That's the trading recap for the day. Hope you guys enjoyed. If you guys have any questions about certain confluences, because I didn't thoroughly go into that, then message me on the Discord. Discord is free, by the way, so message me in the chat, man. So that being said, I will see y'all later, man.